Welcome back to Bunnex Investment Group. In this video, we are going to learn how to catch 50 pips on a pair using this highly powerful London session strategy. So you are going to need to know this parameter, this one, and then this one for you to catch these consistently and catching those so-called sniper entries. So sit back, relax, and learn something new. I would advise you to have somewhere to take some notes. All right, firstly, we need to understand the underlying principles. The market we trade is rigged. I understand that this might give you an alert that we are trading against big fish or big boys. Institutions are always looking for ways to make us fall for the opposite side they intend to take. They want to go to the upside, they'll convince you to go to the downside. That is why when you buy, the market sells, and when you sell, the market buys. I've seen quite a lot of traders actually saying the market hates them. It's not like that, but usually the institutions are playing along this particular principle. However, this strategy is going to make you the disciplined, sharp trader who waits for the right point to sell or buy when the institutions do the same. So, if we cannot beat them, it's better to join them. That is why we are saying we are going to talk of a point where these people actually inject their trades. So, whilst they inject their trades, you have to inject yours as well. So, we need to explain the next concepts so that you can fully be able to apply it in your own trading. So we have three major sessions, which is basically common knowledge, Asian, London, and the US. In our strategy, we are looking to trade the London session. That's the session of the prime time. Why the London? The ideal daily market cycle has three main components, which are Asian session accumulation, London session stop hand and induction, then the London sustained run. This means if we catch the London stop hand, which is the middle part of the ideal daily market cycle, we will enjoy the London long sustained run. So how do we do it? Here's how to catch it. Firstly, we are saying in illustration, we have the Asian session consolidation. Usually the market will chop, right? After chopping, we'll create a stop hand. They always do so. To create a stop hand so as to induce traders or to convince traders to take an opposite side which they intend to go against. You would see that in the London session, they will issue the long sustained run, which is against the stop hand. So the stop hand is what is very important. We need to be able to understand the quality of the stop hand so that we will not be subjective in determining and validating it. So here's how to catch the stop hand. Step 1, we need to have indicators to help us. Have 13 EMA and 50 EMA on your charts, preferably different in color. Step 2, make sure that the Asian session of the day must be 50 pips and below. If the Asian session is above 50 pips, it means they've already blown out and probably incorporated the stop hand move within the Asian session. Step 3, put the chart to 5 minutes time frame. This is where we can see the stop hand move clearly. Step 4, we must see a 1350 EMA cross to either to the upside or to the downside, but only after the Asian session closes. Then step 5, we need to see the 5-minute time frame chart touching the 50 EMA twice, and this signifies the high or low of day or the point where the market makers are now making their entries as shown below. In this case, we can see the first thing is our Asian session is actually 18 pips. This is an M5 time frame, and we have the indicators, the 13 in red, the 50 in blue. We've said after the Asian session close, which is at this time, we need to see a 1350 EMA cross, which occurred here. 1350 EMA cross. After that 1350, we need to see twice retest of the 50 EMA. So in this case, we had retest of 50, right? Retest of 50, which is twice. And after the second retest, we are now going to the point of reversal, or the point of market maker contracts injection, where we will need to look for an engulfing pattern at this end of the third impulse, small impulse. All this being done on the M15 time frame. Before we see examples, please note that we have a free Telegram channel where we share free signals, free setups, and trading tips. See the link in the description box below. So this is euro against dollar. We are going to just see some examples of what we were talking about on the slides. We've said this is on M5 time frame, and as always, we need to see the Asian session being 50 and below. After that, we need to see the market actually making a cross of 1350 after the Asian session closes. After that, we will need to see twice a retest of the 50. In this case, we had 1, 2, and we had an engulfing pattern at this particular point. Going forth on the following day, we can see where was our last crossover after the Asian session close. We had this one. We had a move to the upside, retest of 50, another move to the upside, retest of 50. We had several candlestick reversal patterns at this particular price point. Railroad track candlestick reversal patterns. We can see the market actually went our way. Let's have a different pair, which is pound USD. Right, so on pound USD, we can see this was on the 20th of September 2023. Our Asian session is 13.8, which is okay. Then the first thing that we were waiting for is a crossover. A crossover was issued, but were there 250 EMA touches to the downside? No. Another 50 EMA, 13 EMA was issued here. Correct, right? So this was the last crossover. We had the first one, retest of 50, right? Retest of 50, candlestick reversal pattern, and our entry was going to be made at this particular point. And as you can see, it's highly sniper. And from there, on the following day, our Asian session, 40 pips. And after that, where is our last crossover of the 1350? Here, move, retest of 50, move, retest of 50. At this particular point, that is where we actually made our entry. There was a hammer there, and we could have made our entry to the upside. Our 50 pips was going to be hit around these candles. So basically, that is how you actually trade and make some money using this particular trading entry. Still on that note, you can expand the knowledge by signing up for our advanced course. I'll also leave a link in the description box below. Have a blessed day.